Hello, everybody. It's wonderful to have you guys join us for the second discussion. This is a follow-up. The last discussion we had was a couple of weeks ago, about a month ago, actually. I'm going to do a quick introduction of Dr. Anas. Just bear with me here a second. So Dr. Anas is really versed in regards to the economics. He's got a undergrad as well as a PhD in economics. He's also the chief economist of NGP, Energy Capital Management. He's led the macro analysis of oil, natural gas along the related markets in that regards. He's also authored several articles, a moderator in the OGEL, Oil and Gas Energy Law Forum, and currently serves as a managing partner at Energy Outlook Advisors. So we're going to be talking here. The discussion of the room is going to. Hello? Okay, yes. So just background noise. Sorry about that. So we're just going to be talking about the future outlook of oil here. There's a couple of key questions that we're going to be hammering down. I'm just going to, read out a couple of the key questions that we seek to cover, and then as soon as we cover them, we're going to open up the floor to questions. So this space, last time we ran a little bit over time. This time we're going to try to stick to a hard close of about an hour and 30 minutes and maybe a little bit here or there given based on maybe the demand of the questions. I'm going to leave that up to Dr. Anas Al-Hajj to decide. So couple of key questions we're going to be going over, or the main topic of the room is oil, dollar, and Bitcoin. Will OPEC continue to price its oil in the US dollar in light of current sanctions taking place in Russia? And then the key overview, the overview of the questions, the six questions, is going to be why has OPEC continued to price its oil in the US dollar? What are some of the alternatives? Bitcoin, crypto, this is something that has always been brought up in regards to alternative currencies. What is the impact of the exchange rates on the oil industry? And then, we always hear wild prognostications in regards to the price of oil. So under what circumstances are we going to be looking at 200, 300? And Saddam Hussein and Muammar Gaddafi, price their country's oil in non-dollar currencies. What about China? And then the last question we're going to be covering this evening is will Russia join Russia? Will Russia join China in pricing its oil and gas in non-dollar currencies? So a lot of the topics, based on the questions that I've went over with you guys, relates to the pricing of oil. And the reason that's important is because a lot of the fundamental currency is in US dollars, and it has a big impact on growing demand in developing countries. So this topic is more or less relates to the pricing of crude. And what I'm going to do is I'm going to pass it over to Dr. Anas real quick. And then we're going to start off, he's going to start off maybe with a quick overview about himself to add a little to what I've said. And then we're going to proceed with the questions. Dr. Anas, I pass off the stage to you.
Thank you very much, Sohaib. Hello, everyone. I know we have people from all around the world. So good morning, good afternoon, good evening, late night. Hello, everyone. Before I start, I would urge you to retweet the link to the space so people can benefit from the comments. And the second one is, as you know, we might encounter some technical difficulties. If we do, please come back. We will come back. So if we encountered any technical difficulties, we will be back online within a few minutes. Just a few general comments, and then we start talking about the oil pricing. The events that we've seen last night, Iran attacking something, and I say something because still people debating what they did attack in Erbil in Kurdistan. For the oil market, this is a non-event. Just forget about it. We've seen this before. This was larger than expected or larger than the trend. These areas been attacked by the Iranians several times in the past, or by the cronies of the Iranians in the past. And it was expected. One of our colleagues basically wrote an article about it about a month ago on the 15th of February. and he literally said that we will see more attacks and larger attacks on Erbil. So this is a non-event. Second point, sanctions imposed on Russia and announcement by companies to leave Russia remains symbolic, with impact way lower than what people perceive from these statements and announcements. I'm going to mention just a few examples, although I already have collected over 15 examples. Let's start with our friends in Canada. The Prime Minister of Canada, Trudeau, announced that he is banning crude oil imports from Russia, but Canada does not import crude oil from Russia. Johnson of the UK announced that he wants to ban oil imports from Russia, but by the end of the year. So you can see how things basically are really mild in this case. Biden, in his statements when he announced the ban on oil imports from Russia, he said he imposed sanctions on Russian banks, and he kicked out those banks out of SWIFT. Well, those banks are really local banks, and they have no impact globally at all. Shell announced that it will not buy oil from Russia, but what they said, well, only in the spot market. So they are not going to buy spot, but all the term contracts will continue. And then they said, well, even the term contracts might end, but gradually, and gradually could mean months, could mean years, who knows. But really, the last point I want to mention on this is really the most fascinating. If you look at all the major oil companies' investment in Russia, it's smaller than the investment in one LNG plant in Australia. We are talking about really small investments regardless. So we don't want to make heroes out of things that are really small. Most of those companies basically lost their shares in the last 10 years or so anyway, and they were forced to cut their share by the government. The third point is the large increase in fuel and food prices are causing problems around the world, especially in poorer countries. We have already seen some demonstrations in some of these countries. While most people focus on the political and economic impact of the Russian invasion of Ukraine, let us remember that it also has a social and psychological impact on the populations of other countries through rising costs of fuel and food. The fourth point, while most people are focusing on oil and natural gas supplies from Russia, let us remember that there are several oil-producing countries that are poor. Their populations are suffering from high fuel and food prices. If those oil-producing countries, and I'm talking about the poor countries that are producing oil, if they end up in political turmoil, oil exports will decrease or come to a complete halt. And that will push oil prices even higher. Here, I would like to make a very important point that it's very important for people to understand that averages and percentages do not matter. Everything in economics is determined at the margin. If you are short one barrel, people will bid the prices up. And it's only one barrel, whether it's one out of a million or 100 million. So it's always the marginal barrel, the marginal unit that makes the difference. So those poor countries, if they end up in political crisis, their barrels matter, although their percentage of the total is very small. The sad part here is that all this increase in oil revenues that resulted from the recent increase in oil prices will not be even enough to provide subsidies for the increase in food and fuel prices in those countries. The fifth point, although it is not intended by Putin, Putin has already hit the climate change policies of Europe and other countries where it hurts. First, energy security and national security is forcing them to go back to coal and oil until they find a solution. So forget about climate policies when you use coal and oil. And the second point is governments have to divert subsidies from green energy and electric vehicles to food and fuel. So Putin already achieved an objective he couldn't even dream of just 3-4 months ago. In fact, this might be already happening, especially that reduction in fuel taxes, and we've seen countries basically reducing fuel taxes, is lowering government revenues. So from where they are going to provide those subsidies? The sixth point, it is clear now that oil-producing governments with spare capacity are not willing to deviate from the OPEC Plus agreement. So they are going to stay like this until September, no matter what. And in this case, the only adjustment to expect is not on the supply side. The only adjustment you expect in the market is on the demand side. So expect demand reaction, expect a consumer reaction to higher gasoline prices and other fuel prices. Here, I would like to remind you of a statement I heard from a senior official in the Gulf and the GCC countries. Said never again. And what he meant was that was in 2009. And when he said never again, he meant we will never use all our spare capacity to meet demand, because the moment we did that, we lost the driver's seat to speculators. So those, especially from the Canadian oil mafia, our friends over in the north, when they talk about the capabilities of Saudi Arabia and other OPEC members in terms of spare capacity, the spare capacity is there. Are they capable? Yes. Are they willing? That's the question. So the focus should be on whether they are willing really to use all that spare capacity or not. And the second one we used in the previous space, basically, that we should focus on crude quality. The seventh point is, the question here is who benefits the most from the crisis, from the Russian-Ukraine crisis? It is very clear that it is the US LNG industry and the global trading houses. And of course, our Canadian friends, the Canadian oil mafia. The eighth point, that markets are in a panic. Conventional solutions do not work in a panic. Releasing oil from the strategic petroleum reserves will not work. Increasing OPEC production will not work. Lifting sanctions on Iran and Venezuela will not work. Hoarding is a common behavior during panic. What's the advantage of releasing oil only to be hoarded? We've seen this throughout the world. The ninth point, and that will end basically my introduction. What we see now, and this is a general comment not related only to oil. What we see now is a reversal of everything we have learned or taught in the last 30 years in economics, politics, international relations, and international business. Couple that with climate change policies, and you realize how weird the times we live in. And when times are weird like this, stick to the basics. And now let's go to back to Sohaib for the first question.
Yeah, so what we're going to do here is we're going to pop over. Just give me 1 second here as we migrate over. I'm just going to pull this one up here. So the question that we're going to first cover is, why has OPEC continued to price its oil in the US dollar and the implications of that, what it means as the dollar currently holds strong, and the effects it has on developing countries? Over to you, Dr. Anas.
Yes, probably this is a good time to mention that this event is sponsored by Ataqa. Ataqa is the first and the only media outlet that cover all energy sources in the Arabic language. And Ataqa has about over 20 journalists, about 28 employees, and it is based in several countries, including the United States, Canada, and other places in the Middle East. And here I would like to urge you, I know many of you already pressed the translate button to see what they are producing and publishing. I would like to urge those who hear me here for the first time, please use the translate button, because there is a lot of information coming out of Taqa, and Taqa means energy. And that, or anything I write in Arabic, all you got to do, just press that tweet. They press the Twitter translate button, and you get the translation. The translation is really good. So to answer the question, Suhaib, let me make this introduction first. Oil is priced in US dollar. Therefore, exchange rates matter when it comes to oil supply and demand. This is just an example, and we'll go back to it and explain it in more details. Let us assume that constant at $100 a barrel. So oil prices are the same, they are not changing. If the dollar goes up by 10% versus other currencies, let's say the euro, for example, then oil prices in euro becomes more expensive by an average of 10%. Now think of the implications of such an increase in prices that resulted only from exchange rates. And I will discuss this in details once we go to other questions and talk about the impact of exchange rates. When we talk about exchange rates and pricing oil in dollar, it is important to distinguish between pricing oil in dollar and receiving revenues in non-dollar. So in a sense, pricing oil in the dollar is one thing, receiving revenues in non-dollar is something else. Oil worldwide is priced in US dollar, whether we like it or not. I know some people will say, look at China, they trade oil in yuan. Yes, they trade it in yuan, and people think it's priced in yuan. No, I will explain that once we get to that later on. So why has OPEC continued to price its oil in US dollar despite the many problems associated with that? After all, a decline in US dollar is a crisis for those countries because their revenues immediately decline, especially they buy goods and services from other countries with other currencies. When the US ended the gold standard, the dollar collapsed. Because they're well.
Dr. Anas?
Yes.
Okay, go ahead. You just cut out. Yeah, you're back now. Go ahead.
So when the US ended the gold standard, the dollar collapsed. Oil producers saw their wealth vanishes before their eyes because most of their wealth was in US dollar at that time. They saw their revenues plummet. They saw the real value of the barrel of oil they export basically going down. So they scrambled to find solutions. OPEC formed a committee to study the matter. They brought in experts. They hired the World Bank. They hired the IMF. They looked at various choices. Now, there are all kinds of conspiracy theories about what happened between Kissinger and the Saudis and the pricing of oil, etc. I say they are still conspiracy theories because we don't have hard evidence to show that it was a conspiracy. In my view, the choice of the dollar was the only choice anyway, whether there is conspiracy or not, and I'll explain why. So they looked at various choices. They looked at other currencies. They looked at a basket of currencies. They looked at gold. They even looked at the IMF SDR, the special drawing rights. For those who do not know what the SDR is, I'm going to read it directly from the website here. The SDR is an international reserve asset created by the IMF to supplement the official reserves of its member countries. It serves as a unit of account of the IMF and other international organizations. The SDR is not a currency. It is a potential claim on the freely usable currencies of IMF members. As such, SDR can provide a country with liquidity. The value of the SDR is based on a basket of 5 currencies: the US dollar, the euro, the Chinese renminbi, the Japanese yen, and the British pound sterling. That's the definition and the information about the SDR for those who do not know. But looking at the all the work that OPEC done and all the work that the experts done in the 70s on this and later on, what have we learned from that? First, pricing oil in any currency requires massive liquidity, relative stability, and global acceptability. I cannot even. It has to be globally accepted. So we have those 3 conditions. So it has to be relatively stable. We need massive liquidity, and it has to be accepted worldwide. So these 3 conditions immediately eliminate other choices, as you can see. At current prices, world oil trade right now is about, listen to this number, $2.6 trillion this year alone. So think which other currency other than the dollar can cover that. As you can see, this is immediately rejects pricing in many currencies, including Bitcoin and cryptocurrencies. The only currency that fit right now is the US dollar. I know that some people may say, no, crypto, etc. Well, for crypto, the highest value of all cryptocurrencies in the world, when everything was at maximum, is only 1.9 trillion. So it's even less. Sorry, I think it was 2.9, not 1.9. But the traded one that can be used, assuming that it is a currency, is very small relative to the oil trade in dollar. The second lesson, that the problems of pricing oil in any single currency is the same. Assuming, even if we assume they have the same liquidity and volatility, they still have the same problems. So switching from the dollar to others does not solve the problem that the dollar has. So OPEC basically has no incentive to switch, even if others have the same liquidity and volatility. Well, pricing oil in a basket of currencies is a choice, but that was rejected too. Why it was rejected? Aside from the fact that the dollar occupy a large portion of it anyway, how will OPEC members agree on the components of the basket? Because OPEC members have different trade partners, and therefore they trade with different currencies, with different trade partners, with different quantities, and therefore the basket might be good for one country and bad for another. So OPEC cannot agree. And when you talk about historically, OPEC has 13 to 14 members. They cannot agree on the component of the basket itself. Even if they agree, the basket has to be monitored and changed constantly by a world-class experts, making it costly to maintain. So it comes with a massive cost too. So it is very clear that they have no other choice but to price it in one currency, and that currency is the dollar. The SDR, they looked at the IMF SDR, and it did not work. And one of the reasons why, because we are talking about 5 currencies, and the dollar is one of them. So the impact of the dollar is still there. But the problem was, still you need to convert that SDR to other currencies based on your trade partners. And that causes problems too. So it is very clear that the only choice available to OPEC in this case is the dollar. Back to you, Sohaib.
So we're going to proceed with the next question of interest now. and it's the alternatives. So now that we've discussed that, what alternatives do we have in regards to these alternative Bitcoin, the forms of payment, the cryptos, the Bitcoins, and so forth, Dr. Anas?
Yes. As I mentioned earlier, we have to distinguish between oil pricing and revenues. Oil pricing remains in US dollar, while revenues could be in anything. I mean, for God's sake, it could be a barter deal if they want to. So there is no problem with that. But pricing basically remains in dollar. The three conditions that needed to price oil is not there in crypto. We are talking about liquidity, we are talking about low volatility, and it has to be globally accepted. We already know that some countries prohibit the use of crypto and Bitcoin. Volatility is very high. In terms of liquidity, that is questionable, and I know that's debatable too. But we need the three conditions together to be able to price oil in those cryptocurrencies. I know some people think that we are going to achieve those conditions later on, but until we achieve them, we cannot talk about pricing oil in them. Of course, assuming that crypto is a currency and it's not an asset in this case. Again, all the value of all cryptocurrencies today is 1.7 trillion by today's prices, while global trade in oil is more than 2.6 trillion. Even if you take the peak of crypto, as I mentioned earlier, the number is really 2.9 trillion. But most of it is not used as currency, but as an asset in this case. Sohaib?
So then the follow-up for that on the crypto aspect is, could countries with sanctions, okay, what countries that have the sanctions transition, or what's the ease of transitioning to using these cryptos, these alternative forms of payment, in order to skirt it if sanctions increase and include the financial payments?
Well, in fact, if you look around the world, all the countries that tried to price oil in non-dollar, all the countries that tried to get revenues in non-dollar, all of them were sanctioned. So we looked at Iraq, for example, they switched to euro because of sanctions. We looked at Iran, it's the same story. Look at Russia, it's the same story. Look at China, the same story. Look at Venezuela, the same story. So because they are either banned from SWIFT or banned from working with certain global financial systems, and they were forced to do something else. So they looked at various options, and strangely enough, if you look at Russia in particular, they formed this alliance with China, Iran, and Turkey to trade local currencies and gold. And they did try crypto too, and nothing worked. Crypto did not work. Gold did not work. Local currencies did not work with the collapse of the Iranian rial and the Turkish lira. So, what was the ultimate choice? The euro. So they resorted to the euro as the choice for them. And we've seen Russia basically doing some switching to the Chinese yuan in this case. So they are looking at other currencies, but crypto is not there yet. Now, well, crypto might be a good choice for money laundering in this case. And I'm talking about the embargoed countries to transport money in one way or the other. That work. But in terms of revenues and in terms of pricing, they did not work. They tried them and did not work. Sohaib.
So then what we're going to proceed with next is the implications of the exchange rates. If it is priced in US dollar and the US dollar continues to increase, how is that going to impact third world countries and other less fortunate countries as the price of oil continues to rise?
Okay. First of all, there is a conventional wisdom there that higher oil prices, higher this kind of inverse relationship between the dollar and oil prices. So if the dollar goes up, oil price will go down. Oil prices go up, the dollar goes down, etc. This relationship in the short run is invented, and once they put it into the algos, it worked. But beside that, there is no economic theory to explain it in the short run. We've seen this relationship as a result of the financial crisis of 2008, 2009, when investors basically ran away from everything and they went to commodities. So we've seen that inverse relationship between oil prices and the dollar. And those who came in later, especially the young men and women who joined the financial industry later, they thought that was the conventional wisdom that we learned from the oil industry over decades. That was not the case. We have so many examples to show that this relationship does not exist, and there is no theory to explain it. But once we ended the financial crisis, and we are into 2010, 2011, that was embedded in the algos and kept working. And people say, look, here are the evidence. Look at it. Well, that's made up. That's what the algos made. There is not even the theory to explain it in the short run. When I talk about short run, I'm talking about hours and days and weeks. So there is nothing to explain it there. But in reality, we have a serious problem. A lower dollar or a higher dollar has an impact on supply and demand in so many ways. For example, I mentioned earlier the example that if the dollar goes up by 10% while oil prices are constant at 100, then oil prices and other currencies will go up by 10%. If you go back in history to year 2000, when several capitals in Europe were blocked by truckers and farmers. Why? Because fuel prices were extremely high. Why? Because the euro declined substantially at that time relative to the dollar, and all of a sudden, oil prices and fuel prices in Europe were extremely high because of the exchange rates. So we've seen the impact on people just firsthand in those European capitals at that time. But if you go farther, lower dollar, for example, lowers the real value of every exported barrel of oil. So if you are Saudi Arabia or Kuwait, for example, you see the value of your oil eroding from the lower dollar. And you see the value of your oil going up when the dollar goes up. And the questions in this case is, how will consumers behave as a result of that, and how producers behave as a result of that? And the bottom line of this basically is that higher dollar leads to lower demand and higher supply. And I'm talking about medium term to long term. And the opposite is true. Here there is a caveat that we need to focus on. We have countries around the world where most of their cost, where most of the cost of the oil companies is local cost. So if you look at countries like Russia, for example, or Turkey, most of their cost is in local currencies. So when the dollar goes up and their currencies goes down, they are very happy because their margin of profit immediately goes up. So when the local cost is 60 to 70% in local currencies, and the ruble declines or the Turkish lira decline, immediately their production cost goes down. And therefore their marginal profit goes up. So we see an impact even on companies, in this case, from the differences in exchange rates. Sohaib?
So in this case, for countries like Russia where the ruble collapsed, this for the producers specifically, that would increase their margins if they're selling it in US dollars and they're paying all their costs in rubles. Is that right?
Most of it, probably about 65%, is paid in ruble. So what that means is they are making money from the extra price, and they are making money from the decline of the ruble.
And here's another even interesting thing is you talked about how there is, causation correlation beliefs. Certain things take place, and these are programmed into the algos. And we on a daily basis, we see sometimes disconnects or weird stuff going on. And this could potentially explain some of it if the general idea is if the dollar if the dollar decreases, in that case, then the belief a certain thing would take place, and that's not taking place. So then that's where you kind of see the disconnect in the market, where the dollar is increasing, WTI is increasing, but the equities is not increasing with it if the algos are programmed in that way. Is that right,
Well,
Dr. Anas?
just an example. For example, a decline in the dollar means oil becomes cheaper overseas in local currencies. And the expectation is that the quantity demanded in those countries will increase as a result of the decrease in the dollar. And that will increase oil prices. So we see the inverse relationship in this case, where the dollar is going down and oil prices are going up. The problem is other countries raised taxes so much that they made the impact small. We still see the impact of exchange rate, but relative to the taxes, we see the impact minimal in this case. Therefore, the impact is larger in the countries where the taxes are not as high and the difference in exchange rates is large, and therefore we see oil prices in the local currency way lower, and people will enjoy a lower cost.
Okay, and now there's just a lot of numbers coming out, right? And just typically it's when the excitement builds up, everyone starts coming up with numbers, and it turns into a competition of who could outdo each other. 200, and then someone will tell you 250, and then someone will tell you 300. Okay, so that being said, and we understand the excitement of everyone in the room. What does the path or the road to $200 to $300 oil, taking in the exchange rates into account? Under what
Yes.
circumstances do you see that?
Generally speaking, as I mentioned on a previous space, if we end up, in a sense, we are only one picture away from a major global war right now. Any picture similar to what we've seen in Vietnam, for example, might cause a major crisis, and a major crisis that leads to war, that leads to halt of Russian oil exports, and we're talking about like probably about 6 million to 7 million barrels a day of loss in supplies. In this case, prices will go, in a panic, will go to 200, more than 200. This is kind of a case where we see this massive panic until people realize what's going on. But generally speaking, whether you talk about theory or you talk about what might happen on the ground, if the dollar collapses for one reason or the other, 200, 300, 400, 500 becomes kind of easy, because the $500 in the future with the collapse of the dollar could be equal to $50 today. So the comment you mentioned basically is extremely important, that anyone who is talking about $200, $300 they should really specify what dollar they are talking about, whether it's the dollar of the day or a dollar that results out of a complete economic collapse in the future. So we cannot deny that oil prices might reach any number in the future if we qualify it with some definition of what the value of the dollar will be.
Okay, so in that case, let's just take some, worst case, best case scenario. Let's say the dollar really holds strong. What's the scenario for that? And let's say that the dollar, really go into a recession, whatever it may be. What are the implications in that scenario?
Generally speaking, higher oil prices and a higher dollar is a forthcoming crisis for the oil producing countries. It literally means that the demand outside the United States will decline. We are going to see a decrease in demand simply because oil products are extremely expensive and people will find alternatives. And when I talk about alternatives, I need to point out one more time that the alternative to gasoline in the car, some people say, well, there is no alternatives and elasticity is very low. Well, this is the wrong way of looking at it. When we look at gasoline and a car, we are talking about the ride. So we should look at the alternatives to the ride, not alternatives to gasoline. This is just like cameras and films in the old days. You need a camera and you need a film to get a picture. It's the frame, it's the picture that you need to find alternative to, not the alternative to the film itself. And we did. We find that electronic cameras basically in every phone right now. So the alternative is to the ride in this case, and people are going to change their behavior. We've seen this so many times in the past. So higher dollar and higher oil prices are a bad combination for the oil industry in general.
And typically, if they hold really strong or really high, so the less fortunate, the developing countries, how does it look like in terms of them getting together and forming an alternative way or discussing a different way pricing mechanism or a different currency that can allow it to become more affordable for them? Because
they will have no time. We've seen it before. Some countries are going to default on their loans and the international financial system is going to suffer. Some banks in Europe and the United States are going to go bankrupt, and we end up with a major problem. But I can assure you one thing, that even if a small country in Africa is going to suffer, at that rate, at that level, we are going to see some large countries in Latin America in particular, I'm talking about very large countries, are going to default even before the poorer countries in Africa. So we are going to end up with a global crisis as a result.
And then the next question would be in regards to Saddam Hussein trying to change the price of the currency that he was trying to get for his oil, along with Muammar Gaddafi, and in regards to what China could potentially be doing. So that would be the next follow-up question to that, Dr. Anas.
This is a general mistake. Saddam Hussein did not price the Iraqi oil in euro. Saddam Hussein asked the United Nations, who controlled everything at that time, to hold Iraq's revenues in euros. Again, I mentioned earlier that we have to distinguish between oil pricing and revenues. So he did not price oil in euro. He asked the United Nations to switch the money, that Iraq's money, from dollars to euros. The same thing for Muammar Gaddafi. Muammar Gaddafi did not price the Libyan oil in non-dollar. All he did, basically, he switched the revenues. The same thing, we've seen the same thing in Iran. We've seen the same thing in Venezuela. People might say, look at China. We have basically an exchange that is dominated by yuan. And for some of you remember those debates we had on Twitter when some people went crazy over the idea that it was gold backed. And we know that was false. It wasn't gold backed. And it was just priced in yuan. But if you really study it carefully, you'll be shocked and surprised to learn that all the changes in the spot market and in the futures market in UN denominated contracts in that exchange are perfectly linked to Dubai crude, Dubai Oman crude. So if you adjust for the timing, you adjust for the currency exchange rates, minute by minute, it's correlated, which means that yes, you can see on the screen that the price is in yuan, but the actual pricing is happening through Dubai and Oman crude in dollar. So until today, we don't have any pricing in non-dollar anywhere in the world. So yuan basically is just a mirror image of what's happening in the dollar market. So oil remains priced in dollar.
And then when we talk about Russia joining China in pricing oil and gas in non-dollar currencies. How would that look like? Under what circumstances would Russia move towards that type of system?
The Russian move is significant in a couple of ways. First of all, I know my colleagues, the macroeconomists, basically would argue that forget about oil pricing. Yes, everything is priced in dollar, but what matters to the market is really switching the assets, the revenues to non-dollar, and that has an impact. And that is a perfectly valid idea, that it has an impact on the dollar because you are switching the assets to something else and the revenues. So we have an impact there. But it is very clear that Russia is going to continue ditching the dollar, will continue converting revenues to non-dollar. In terms of pricing, what we've seen from China basically is, again, the method of the implementation allows this perfect correlation between Dubai, Oman, and Shanghai. But we have not seen oil producers change their behavior toward that. Russia will be the first one. So if Russia decides, I'm going to join China and I'm going to join the exchange in China to sell my crude on the exchange there, that will be the first one and the first time. And what will happen if we see deviation in the pricing in China after the entry of Russia from Dubai and Oman, then we can say then there is a pricing in non-dollar. If the correlation remains the same, then the pricing will remain in dollar. My guess is the entry of producers into this system will make the prices deviate from Oman and Dubai, and therefore we might see a new system emerging in non-dollar in this case.
Why do you think that's the case? Why do you think that a new system is going to be around the corner? A new system of pricing these barrels?
Because all those sanctions that are being imposed, although they are mild, but they have an impact. Let me reiterate one point here. Sanctions are imposed in theory to force the other party to change his or her mind. So in this case, sanctions are imposed on Russia to force Putin to withdraw from Ukraine. If Putin withdraw from Ukraine because of the sanctions, then the sanctions are successful. But if you look at the literature that covered the last 120 years of sanctions, of course, we have several wars and sanctions, etc. The record is clear. Sanctions always fail. So if they fail, then why countries impose them? Well, governments impose sanctions because of their symbolism. They need to show something in front of their people, especially in democratic countries where they need to show something so they can win the next election. And in dictatorships, they want to show their people that they are strong. So they impose sanctions for their symbolism. But other countries, they reject sanctions, and sanctions do not work simply because sanctions invoke nationalism. And invoking nationalism in those countries means their threshold of pain is way higher than before, and therefore they can withstand the pain. Sanctions are painful. No one is denying the pain. But we have to distinguish between changing behavior and hurting. These are two different things. So those sanctions hurt Russians. They hurt this Russian government, yes. But will that change the behavior? History tells us no, they are not going to change their behavior. So sanctions are imposed for their symbolism. They fail because the sense of nationalism they invoke make people handle the pain of sanctions in this case. So there is pain. And that pain is going to force people to find solutions. And one of the solutions basically is to ditch the dollar and look for other currencies and other systems, like the Chinese SWIFT system, for example, or the Chinese exchanges in this case. So it's the pain that will force them to do that.
And under what circumstances do you see a serious threat to the current system of having the dollars, having the barrels priced in dollars?
Well, under the current circumstances, it's very hard. We might see some countries behaving that way, but again, we have those three conditions that I outlined earlier. That we need this massive liquidity, we need relative stability, and has to be widely accepted. Because of that, it's very hard to see it global, especially that the United States is the largest oil producer. It's a major oil exporter. So even if other nations try to switch, the U.S. itself basically try to assert the pricing of the dollar through its power as a major importer, a major producer, and a major exporter. We can see it with some countries, but not global.
Okay, and then right before, since we've completed this, and we're going to open up the floor to questions real quick. I guess the last question in that regards is the demand destruction. Demand destruction is just something that, you know, as soon as we've seen a spike, $128, even though we've seen historical high prices, demand destruction is all we hear all around us. So would you be able to, you know, talk about that, talk about demand destruction, and talk about as it relates to the dollar, and then the differences, the impacts that will demand destruction will have as if the dollar gets stronger or weakens and so forth. Thank you, Dr. Anas.
I'm going to thank you. I'm going to speak in academic terms here. We have to distinguish between demand destruction and demand decline. When we talk about destruction, it means it's gone forever. It cannot be recovered under any circumstances. Most of the demand destruction comes from technology and change in consumers' attitude. But anything that related to prices and income, that can be recovered. That's a decline. So anything that cannot be recovered, mostly due to technology and changes in people's behavior, that destruction. Anything that can be changed due to price and income, and probably other economic factors, that is a decline, and that can be recovered. You ask about its relation to the dollar. One of the issues that we are going to face right now, and I know there are some experts out there who are studying this. The higher the price of the oil barrel, the more dollars we need. And and you mentioned earlier, what if prices go to $200 or $300? Will we end up with a liquidity crunch in the future if oil prices continue to go up? And what is the impact of that on the oil market? I think that needs to be studied and figured out. I never done any work in this area, but I can see a potential for research there.
Wonderful. Thank you, Dr. Anas. And with that, I'm thinking of opening it up to question and answer session. If there's anything you wanted to add or say prior we do that, Dr. Anas, feel free to do so.
Well, generally speaking, I urge everyone to keep their questions only to one question, since the time is limited and we have a large number of people. And if there are any comments, to be delayed until the questions are over, if we have time, and make the question short, please.
And in order to help support those comments, I'll be doing my best to keep it brief. We're just going to try to stay away from monologues or anything of the sort. You know, briefness will be prioritized. With that, I'll start it off with Alex Filstein. Go ahead.
Yeah, thank you so much, Dr. Anas and Sohaib. Much appreciated. My question is related to the 1970s energy crisis, where there were significant, substantial petroleum shortages at elevated prices. And I just wanted kind of to pick your brain on what happened to the US dollar and the gold during the peak in the mid 70s and kind of towards the collapse in the early 80s? Thank you.
Generally speaking, this is a historical question, and there are many references to that to talk about it in details. But when the U.S. basically decided to kind of separate the dollar from gold, and the dollar collapsed at that time, and then gold prices went up, that what happened is, forget about the increase in oil prices at that time, because we had special circumstances in the 70s. We had an energy crisis in the United States that started in the early 70s, and literally the embargo of October 1973 kind of like capped the crisis, just ended it at that time. But the increase in prices cannot be explained by the lower dollar and the higher gold prices at that time, unless you want to look at it that the OPEC cut that happened was a reaction to them, not as a reaction to other things. In this case, yes, the decline in the dollar forced OPEC members to cut production, to increase prices so they can compensate for the losses relative to gold. There are many references, if you are interested to read about this, and many papers being written on this, especially in 1974, 1975. Sohaib?
Hashtag oil, I see your hands up. Nice to have you join us. Go ahead, hashtag oil.
Thank you, Sohaib, and Dr. Anas, a pleasure as always. I'm looking forward to listening to the replay, and I apologize I'm late. Quick question for you. You obviously, the Canadian oil mafia can appreciate your popularity in the world, and it must be very exciting times for you these days. Could you share with us the number one question that most of your clients are asking you today?
I mean, the universal question is where oil prices are going. I mean, this is the question I'm getting several times a day. And the answer, I know some people got shocked because of this. The answer to this question is, I don't know. And the reason why, because we are in a panic. In a panic, nothing makes sense. And people's behavior in a panic does not make sense. Where do we go? And if we are only one picture away from a major global war, what do you do? If all the media is lying about almost everything, and we are getting conflicting results, what do you do? We have higher fuel prices and higher food prices that are leading to demonstrations in several countries. What do you do? We have elections coming up, and politicians are reacting to the inflation and higher prices. What do you do? So you can see that answering this question that people are asking is extremely difficult. Coming up with scenarios is easy. Anyone can make up scenarios. You don't need experts to make up scenarios. So anyone can make a scenario, and some of those scenarios could be right, but they mean nothing, because the moment you have several scenarios, then you cannot say, well, I really predicted this. If you have only one scenario and you say, this is my prediction, and it is right, then you are spot on and you deserve gold. So generally speaking, the question is about the future of oil prices, and there is no clear answer.
And, just a quick follow up to that. When we talk about instability as a result of higher prices, now, certain nations, especially in the Middle East, are really prioritizing stability in the region. And we all know higher commodity prices, higher prices in regards to crude typically means tighter tightness in regards to quality of life and further. Would you be able, and you talked about people protesting and so forth around the world, would you be able to discuss that?
Sohaib, I don't hear you anymore. Are you still there?
Yes, I'm still here. You don't hear me? Hello?
Sohaib, are you still there?
Yes. Hashtag oil, can you unmute and let me know if you hear me or not?
I hear you now. Go ahead.
I can hear both of you. Please continue.
Perfect. All right, thank you. Just to, Dr. Anas, you talked about the turmoil that this will cause on people's quality of life, the higher prices. Would you be able to talk about that in relation to some of the OPEC nations that really prioritize stability, the effect the rising energy costs is going to have in a region? We've seen many years ago what's taken place. Would you be able to touch on that?
Yes, I think the impact is kind of multiple fold here. But let me clarify one point that is extremely important when we talk about inflation. All the inflation numbers that we get from governments do not reflect the cost in real life. These inflation numbers are lower than the impact in the street, which means that the inflation in the street is way higher. Why? Let me give you a true example so you can understand what I'm talking about. Remember the hashtag crude quality matters? That the word quality there is extremely important when it comes to inflation. It's not about crude. Now apply quality to everything. For example, you can go and buy a high quality shoes for, let's say, $400. And those shoes can last, for example, 3 years. Or you can go and buy low quality shoes for $20 or $30, but you have to buy shoes every month or every 2 months. If you compare the cost of wearing shoes, basically not being barefooted, over a period of 3 years, you will find out that buying the cheap stuff costs you more than the expensive stuff. Since the government measures inflation by a basket of goods and services, and they are counting what's in that basket, they are counting those cheap shoes. But since you are buying so many of them, they are not appearing in the basket. And therefore, the inflation on the street is way higher than what the government is reporting because of that quality issue. The quality of products been deteriorating heavily worldwide in recent years. And therefore, inflation on the street is always was way higher than what governments are showing. Now, we go to the oil producing countries and others. What we see more dependence on China. And the higher the inflation, the higher the dependence on the cheaper goods that are coming from China and other places. So we are changing patterns of trade and the quality of the products as a result of those increases in fuel costs and food costs. And that's going to have a major impact worldwide, and it's going to have a major impact on our lives. So, hey.
Got it. So you're referring to, products shrinking in size, or even the quality of the product is not where it typically used to be as its input costs starts to increase. Is that correct?
Well, the idea here is we are going to see people switching to the cheaper products while the government is showing us low inflation. The cost over time of those cheaper products is higher than if we bought the higher quality products.
Got it. I also recognize that that we have Faisal on the stage here with us, and at any point in time, if you wanted to raise your hand or have anything to share, would love to hear any of your inputs, Faisal. Wonderful. Let's go right over to you, Faisal, and hear any contributions. Go ahead.
If you don't mind, I would like to make an introduction to Faisal.
Absolutely.
I think Faisal should be on one of the spaces soon. He is literally one of the top military experts on what's happening on the ground in Ukraine. Please, Ustaz Faisal, تفضل.
Assalamu alaikum. Thank you, Mr. Anas, for these words. I'm still a student in your schools here. Actually, I have a question regarding the oil price right now. I don't know really what's the issue, because OPEC Plus, they're still stuck with their deal and there is no shortages in the supply. Additional to that, the price is going up. We know that Saudi Arabia and OPEC Plus, they reject the request from Biden administration regarding that they supply more oil to the market. But my question is, why the price is going up? Is there a problem in the chain supply? Is there a problem in the panic in the market, or there is a problem because a lot of countries, they're using their oil reserve that they have? It's like United States, they clarified that they already used like 60 million barrels from their reserve. And thank you.
Thank you very much. If we look at oil prices without the Russian invasion of Ukraine versus Russian invasion of Ukraine, the difference from the lowest point to the highest point is about $50. And this $50, less than $10, probably about $7 is related to speculation. The rest are caused by other things. So we cannot blame all the $50 on speculators. There are causes for those. For example, we've seen a decline in Russian exports because because of European banks refuse to give letters of credit to buyers of Russian oil. We've seen some insurance companies refusing to insure ships or tankers that will carry Russian oil. We've seen the cost of shipping going up. The cost of insurance for those who want to insure is going up. So there were other factors, and you add to it the results of the panic. The results of the panic, basically, one of them includes hoarding. That's actual hoarding. We've seen over the years, we've seen behaviors, for example, oil that is sold in the spot market, not via contract, because via contract, it has a clause that does not allow resale. But for the spot, it can be resold hundreds of times. Doesn't matter. We've seen, for example, cases where I'm just making up this story right now, but you can tell where I'm going. Let's say a Chinese company bought a million barrel of oil, and that million barrel is going on a ship to China, and then someone in Europe decides to buy it, and then the ship will switch gear and change direction and start going toward Europe, and then someone else basically in Korea decides to buy it, and then it switches direction and go back. And the end result of this is that we have more ships on water than what we are supposed to, and less oil is reaching the land to be used. So during panic times, we've seen things like this. It may not last long, but it happens. And people look at it and say, well, look, I don't have the oil. And people start talking about it. I've been waiting for 5 days and the ship has not arrived yet. Or people who work on ports say, well, we usually receive 3 tankers a day, and now we are receiving only 1 tanker. So there are reasons why oil prices went up. But the question is, do we have shortages right now? Yes, we do. And the shortage basically is the result of all those factors together. Should OPEC Plus increase production? Should the Gulf nations increase production above the planned increases? That's a big question. And the reason why, because if they want to continue balancing the market and they want to manage volatility in the market in 2023, 24, 25, they need to intervene, and they need to increase production, etc., etc. But oil is a political commodity, which means that we always, when we look at oil, we look at economics and we look at politics at the same time. And it is not in the interest of the GCC countries in particular, whether we are talking about oil or gas, to increase production at this stage above what is planned, simply because of that balance between politics and economics. But we do have shortages. Those shortages can be covered by releasing oil from the SPR, can be covered from releasing oil from commercial inventories. So we have more decline in commercial inventories in this case. But again, the issue is we are in a case of a panic, and we don't know how this is going to play out.
And then I guess perhaps a good segue to that is what we've seen last week in regards to the UAE and Saudi Arabia. There could have been issues, and the ambassador was out there messaging, signaling one thing, the UAE ambassador, and then the oil minister of UAE was signaling something else. And as a result of that, we've seen a significant drop in the price of oil. Would you be able to go over that as well, Dr. Anas?
Yes, I think one thing I learned from working in private equity and I tweeted about this several times in the past, is that perception matters. What people perceive you saying is different from what you said. And I learned the hard way. For example, if I say that oil prices below $40 are not sustainable, some people might think I said oil prices will never ever decline below 40, but they did decline. So perception matter. And I think the issue in the market at that time was the perception of the media first, and then traders and others second, of what the ambassador said was not as really what the ambassador said. For example, the ambassador said UAE can increase production. This is a fact. Yes, they can increase production. But what does that mean? Some people thought, well, that means UAE is going to increase production tomorrow. He said UAE encourages others to increase production. Well, if you look at it, yes, in a sense that the UAE encourages everyone else in the West and the shale producers and others to increase production. These are general statements. Yes, the impression was that the UAE will increase production regardless of whether the statement's correct or not. We've seen the energy minister tweet and clarify that UAE will abide by OPEC Plus agreement. He did not rebuke what the ambassador said. You can see that they can complement each other. There was only one word the ambassador said might convey that there should be an increase, when he said the UAE encourages others to increase production, and they should increase production along those lines. But we've seen the market react strongly to it. That's a sign of panic and proves the point that it's very hard to predict the direction and the levels.
Got it. We're going to go with Rami, and then Wajahat, and then we'll go with Tom and Shubham. Go ahead, Rami.
Thank you, Sohaib, for the opportunity. Dr. Al-Haji, I've listened to you explaining the part about the price, the selling of oil, the difference between price and revenues, the part where you mentioned that the profits go in, or the revenues go in euro. If I want to go a little bit back in time, there was something called the USSR, and there was a sustenance at a period of time, and I believe they were able to deal with the export of oil and gas in their own currencies at that time. That said, and going back to your explanation that, only the US dollar is the currency for the selling and buying of oil, and alternatively, you can only bank with revenues in a euro, or the Chinese substitute for it. But history shows back in time that gold was the currency rather than something of being printed in a paper and then backed up by assets and commodities. Again, for the euro to be as revenue.
Rami, just so we can keep it as brief as we can, would you be able? Yeah. So okay,
I'm almost done.
Go ahead.
So, how come the GCC countries, they can align and make a coalition, and to have something counterpart to the euro, a gold, an Arab gold, and that would be a substitute for the US dollar?
Okay, there are several mistakes in your presumptions. The first one is it was the Soviet Union. It was the communist Soviet Union where everything was planned. There were no markets, period. When there is no market, you cannot talk about price, period. So there was no price. It was the Soviet Union and the communist bloc, and they traded according to their plans. So there was no price. But when the Soviet Union sold some oil overseas to other countries, it was sold based on the capitalist market in US dollars, and they pocketed the dollars. That's number one. Number two, For the GCC countries to be able to do what you said, they need, like I said, the oil trade is $2.6 trillion. How they can come up with a currency that can cover this trade? They cannot. So there is no other option. So, hey.
Tom, go ahead. Tom?
Yeah, sorry, I had stepped away for a second here. I had a question concerning what you really think the energy demand is going forward for the next decade, and what you expect to be the mechanism that really delivers that. Is it going to be oil and gas at a higher supply? And where do you see these supplies coming from? Do you see, like, for instance, the Ukraine-Russian war that we're experiencing right now? Do you see any peace talks perhaps working out in the next few weeks, and then seeing a rapid decline and ratcheting down of everything? Or do you see a much more restricted, tighter space for the next 6 months, just leading up to higher supply restrictions and increasing demand, of course, whenever
I assume this question is a build up on the previous session we had on spaces, because we talked about these issues, and I will answer this briefly. First, oil demand in the next 10 years is going to be way higher than all forecasts. And now with the idea that Putin already nailed the carbon neutrality policies and the climate change policies of Europe, is going to be even higher. So I think by 10 years from now, oil demand is going to be above 110 million barrels a day. With everything we hear about climate change and everything else, I think oil demand is going to increase substantially. Now, do we have 10 million barrels a day in the next 10 years? Based on the current investment? No. Based on current policies? No. So that's why I was in the previous session, I was talking about the coming energy crisis. We are going to end up with energy crisis no matter what. Even if we start investing today, we are going to have that energy crisis, but it's not going to last long. But the longer we wait on investment, the bigger the crisis is going to be. So demand is going to go up. We are going to end up with a crisis because we cannot meet that demand, and oil prices will go through the roof.
I mean, this is something that the Europeans are currently going. So especially, I was looking at bills. One family member, they got quoted 13 times what they're currently paying for the next year. So it's within even the next 5 to 6 months, we're going to see something interesting, it appears. Wajahat, I'll go over to you, and then we'll go over to Shabam, and then Kumar. Go ahead, Wajahat.
Thank you for giving me an opportunity. Okay, I have two questions. The first is, as we have seen a sharp rise in oil prices, so what do you think, what is the short-term solution for this, and what is the long-term solution? And the second question is, if world stop buying completely from Russian oil, then what do you think? Are these Arab countries are ready in a position to fulfill the world demand?
Okay. What is the solution to high oil prices at this stage? We have a serious problem, and as I mentioned earlier, the solution is going to come from the demand side, not from the supply side. We are going to see a reduction in demand. People are going to change their behavior. The only reason why we have not seen this major change in behavior of the American consumer of gasoline, like the one we've seen in 2007, is really COVID-19. People are still scared, and they are scared to go back to public transportation. They are scared to go back to carpooling. They are scared to send their kids through via school buses. So we are seeing the impact of COVID here. But if the impact of COVID ends, we are going to see a major and probably fast reaction, showing a major decline in demand for gasoline in the United States. Regarding the second question, and I would like to emphasize this point here, if we lose all Russian oil, again, all Russian oil, we have no substitutes. We have no replacement. End of story. If we lose some of it, probably up to about 2 million barrels a day, we have substitutes. But remember what some of our friends in the Canadian oil mafia were talking about. They were talking about we don't have spare capacity. Well, guess what? If we lose 2 million barrels of Russian oil and other countries compensate, it's gone. Sohaib.
We're going to go over to Shubham. Go ahead, and then we'll head over to Kumar. Go ahead, Shubham.
Yeah, thank you again. Always a great time, Doctor. My question, and I don't know if this has been answered already, so I apologize in advance if so, but the Saudi Arabia OSP was the highest it's ever been this last month here, and they import roughly 70 to 80% of their food, which is skyrocketing, and they need to subsidize this for their citizens. So they're raising the OSP accordingly. I believe this also happened in the 1970s. Can you comment on this? Like if food keeps rising, Saudi will keep raising the OSPs, which then Kuwait, Iraq, and Iran will keep raising their OSPs, and Brent will be pulled upwards. Is that a correct understanding, or was there something I'm totally off base here? Thank you.
The OSP is completely independent of government policy. I mean, let's be clear about that. That's an Aramco OSP. That's a company decision. Has nothing to do with government decision. Period. But the point you mentioned is valid, and that's why I mentioned that, especially about the poorer countries that are oil producers. The sad part is we are going to see all the revenues from the increase in oil prices are going to subsidies of food and fuel. So therefore, there are no benefits, especially from an economic development point of view. So the point is valid, but the correlation is not.
Kumar, go ahead.
So there's shortages of lots of stuff: potash, fertilizer, sand, 100 mesh sand. What are the shortages you're monitoring when you look at all of the system?
We have to kind of separate those in silos in a sense. To me, there are the basic foods that certain countries import, and they are very critical. So that's where the massive increase in food prices is. And of course, fuel prices. When we talk about fuel prices, I know many people in Europe and the United States do not pay attention to this. But in other countries, when we talk about fuel prices, we are literally talking about fuels that are used for cooking too. It's not only about cars. It's not only about planes, which means that for those families to have hot meal, they have to pay for fuel. And that's where some of the problems are. If you look at places even like India and other places, they need to pay for fuel basically to cook. So it affects food supplies too. And then other silos include certain minerals and metals that affect certain industries. And one of the problems, I know this is not the subject here to talk about, but one of the problems we are having right now is that we have many things because of COVID. We have many things we need to replace, from our cars and trucks to things at home to ships and planes, etc. And we don't have enough materials to do that. And if you look at the shortages in the materials needed for replacement, so we are not talking about even expansion. We are just talking about replacement. So one of the issues we might run into is that we might run into a case where we don't have enough planes to meet the demand for seats as a result. Sohaib?
We're going to go over to Visor, and then we'll go over to Sadek. Go ahead, Visor. Okay. We'll go ahead, Sadek, and then we'll come back to Visor. Go ahead, Sadek.
Okay. Thank you for having me. I'm obviously Nigerian, and I'm spacing from Nigeria, and I just want to understand, Doctor, how this affects Nigeria as it is, because the government subsidizes petroleum products here, PMS, and right now we have a lot of queues around the country because there's been a bit of shortage, and so the black markets are out, and yeah, so I'm just thinking about further down the line, the implication of this for Nigeria and the fact that Nigeria continues to subsidize these products. It's been a political tool in the past whereby previous governments have tried to end this subsidy on petroleum products. As an oil producing country, we still import refined products, and I'm sure you're aware of this. So the short, medium to long term implication of this crisis as it is. Thank you.
Thank you. As you know, Nigeria, if you look at Nigeria on its own, given its size, land, population, and all the history and all the problems it has, it's I don't want to say it's a big problem, but now the problems are compounded. And I know the government tried to reduce subsidies and the government tried to liberate markets. But at this stage, there is no choice. Even the richest countries in the world are subsidizing their populations and they are giving fuel subsidies. So they have to renege and they have to go back and give subsidies, regardless of the politics of it. We are in a severe situation right now worldwide. Inflation is going to change societies if we don't take care of it. And Nigeria definitely is one of those countries that will be affected negatively in everything that's going on. It's very hard to specify certain policies for Nigeria, again, because of the complexity of Nigerian issues.
Okay, so we're going to go over to Visory real quick. I'm just going to send him a quick wave here. You can't hear. Okay, you know what? We're going to move over to Seppo. Go ahead, Seppo.
Yes, thank you. When Colin Campbell formed this Association for Study of Peak Oil, the group in Uppsala University started to study the the production was from the largest oil fields in the world. And they came to the conclusion that the over 50% of the oil was produced from the 500 largest fields. And they have analyzed the plateau production and then those fields which have gone into decline. And they came up with the idea that the world's oil will peak at 2018. Now, you mentioned that we're going to go to 110 million barrels a day in 10 years. Do you think this is realistic? That is, the question is that even if you're trying to invest today, that is the international oil companies, are they able to find this new oil? Thank you.
Okay. I don't know what to say. The moment you mentioned Espoo and Colin Campbell, I have many stories to tell about this. And let me tell this story because it is very important. First of all, oil in the United States was discovered in 1859. People started talking about the end of oil in 1860. In 1860. And they continue to talk about it. The first report that came out, I think, in 1897 says the last drop of oil in the United States will be used in 1921. We have more oil than ever. We have more reserves than ever. And with Colin Campbell in particular, I will tell you a story, and I wrote this story publicly, so I have no problem saying it. I told Colin Campbell, you worked for this oil company for 40 years. You did not open your mouth about peak oil. Now you created a new career by talking about peak oil. Why you did not speak up when you were working for that company? And he said, I don't want to be fired. And I told him, you lied before. Why I have to believe you now? Every forecast by this group has been proven to be wrong. Every single one. Now, we have the shale that's been added. We do have enough resources. We don't have enough investment. We need that investment. With climate change policies, we cannot have those investments. And therefore, we are going to move from energy crisis to another. To solve the crisis we are in, we need a balance between energy security and environmental security. If you sacrifice the energy security at the altar of climate change, you lose it all. You lose environmental security and you lose energy security. Look at Europe. They are going back to coal right now. Why? Because they sacrificed energy security. So we need a balance between the two to move forward. We have enough resources. We don't have enough investment. So
let me just add that since 2020, since 2000, when the peak oil kind of increased in discussion, we have used about 247 billion barrels of oil. So the question basically is that even if those people were wrong at the time, the probability is that the next person who is talking about peak oil is right has increased tremendously.
Theoretically, you are right, but think about it this way. Open Saudi Arabia, open Iraq, and open Iran for international investment. Totally free markets. What do you think will happen?
Well, okay, these are these are your scenarios. The question is whether will they happen or not.
Why your scenarios are correct and mine are not?
I don't. Well, my scenario is basically, and I put it on my YouTube page.
Seppo, let's do this. Just because we're and Dr. Anas, I have to ask you this question too. Is it okay if we can do an extra 5-7 minutes, finish up the people that's on stage?
Yeah, let's do it at 45. So we still have, and please let the gentleman finish his comment because.
Basically, what I'm saying is that I put a YouTube lecture on my thoughts on this stuff, and basically I'm saying is that the industrial civilization is gonna go into collapse, certainly within, let's say, 40 years. Okay, so that's what I like you to comment on.
If you don't mind, if you contact me on Twitter, I will send you a review I wrote on the Fias book. And one of the comments I made, why all of a sudden peak oil evangelists, and I'm talking about peak production, all of a sudden they are experts on the end of societies and how societies lived, while they are just geologists or physicists or others, where that experience came from. So please contact me on Twitter and I will be happy to send you that review.
My experience is thermodynamics, so I'll be happy to contact you. Thank you.
Thank you.
Okay, we're going to go over to Visor real quick. Visor. So sometimes, okay, Anas, could you tell Visor to go because he can't hear me? Sometimes you get glitches like that. Could you just tell Visor to ask his question, Anas? Maybe he'll hear you.
Visor, do you hear me? If you hear me, please ask your question.
Yes. Sorry, I wasn't able to hear Suhaib. I wrote him a message. Okay. Thank you, Suhaib. Thank you very much, Dr. Al-Haji. I have a quick question. The West, namely the US and some EU countries and Great Britain, have enacted sanctions towards Russia, respectively to their oil and potentially to the gas. Since we're talking about oil, yet there are large consumers such as China and India that really do not want to enact sanctions towards Russia. If there would be Western sanctions towards Russian oil, what do you think will happen with their production?
The issue here is this. We have experience with other countries with sanctions before, starting with Iraq, then with Syria. We've seen others with Iran, Sudan, etc. Sanctions are meant to be broken. Whenever you have sanctions, basically, you can break the sanctions and a lot of people will make money out of that. So sanctions can be broken. The issue is how those sanctions are going to be broken. The problem with Russia is the amount of oil is too large. With Iran, we are talking about, maximum of 2 million barrels a day. 1 to 2, that's manageable. But once you start talking about 5 and 6, that's very hard to manage in terms of smuggling or working around it. And there is no physically, given the location of those fields, some of it is very hard really to work around. So there are some serious problems. But will that lead to collapse of Russia? No, because they can still sell probably up. I'm talking about total sanctions. With total sanctions, they can still sell about 3 million barrels a day without any problems.
Okay, and will that create a parallel market where the price will be below what is quoted in the markets?
It's not a parallel market, and but I understand what you are talking about. It will be a discounted oil, but it's not a parallel market because the final consumer is paying the world price no matter what. It is those in the middle who are pocketing the difference between the discounted price and the global price.
And we've got Faisal with his hand up. Go ahead, Faisal.
Yes, Mr. Anas, I have a couple of questions, and they're going to be short. First of all, that we notice right now during this crisis in Ukraine, the gas price is stable and the oil is not. Even the main issue is the gas pipelines comes through Ukraine. The other question is, worst case scenario, we say the Brotherhood pipeline went offline for any reason. What's going to be the price for the gas?
Generally speaking, when we talk about natural gas, we have to distinguish between two prices. We have the contracted prices that was stable relatively, although it's linked to oil, but it's less than the spot price. Spot price has been going crazy. We've seen countries basically paying record prices for it. So we've seen very high volatility in the spot price of natural gas. What we've seen related to this is that let's go back in history. Since Putin came to office, if we study his foreign energy policy, it was very clear that he wanted to make Europe dependent on Russia. And the only way he can do that is to make Russia a credible partner with dependable supplies. So historically, he did not use oil or gas as a weapon to pressure Europe. Most of the interruptions happened because of Ukraine. But we have a new development that happened after that. Before the Russian invasion of Ukraine, we have a special case. We have an energy crisis in Europe, energy crisis in China, and energy crisis in India. Because of those energy crises, we ended up with record prices of natural gas and record prices of LNG. One of the problems that led to this is this thinking that we need to ditch long-term contracts and focus on the spot. The collapse of energy prices during COVID in 2020 and part of 2021 give countries more incentives basically not to renew long-term contracts. And as a result, we ended up with massive demand in the spot market, and that contributed to higher prices. Well, the behavior of the producers as a result changed, because in a contract, if I am a producer and I'm selling my oil, and let's say it's 70%, 30%. So 70% contracted and I have 30% not contracted. But I usually, historically, give those 30% or most of them to my customers who have long-term contracts. Now, the spot prices are going through the roof, and they are in places higher than others. So I'm going to strip my own customers of long-term contracts of this and send it somewhere else where the price is way higher. So we've seen the decline in Russian exports to those countries because those exports went somewhere else where the price is higher, but they fulfilled the contracts. So in a sense, we have those two different prices. At the same time, if we look even at oil contracts, you see there is a clause in them that allows both parties to go within, like, for example, 10% margin, less or more. And we've seen some producers basically playing with the contract this way, because I can take 10% from you and literally sell it at the spot market and make money. So Russia squeezed Europe through this system that Europe created in the first place. But generally speaking, the spot market in gas was as volatile as oil.
So we'll go with Owen, and then we'll go with Badr, Hani, and Shubham. Go ahead, Owen.
Thank you so much. First of all, for allowing me to ask the questions. The topic is very good, and so my question is there any way the prices will go down in near future? Because I'm seeing the prices going up, especially in the US and Asia market. So eventually they will go to Iran or other resources, so the prices come down? That's my question. Thank you.
Prices of what?
Of oil and gas, of gases, of petrol, the gas prices.
Okay. Again, it's very hard to answer this question. Again, we are in a panic. We are in a situation where things could flare up anywhere in the world right now because of higher food prices and fuel prices. So it's very hard to predict. We want to play scenarios. Anyone can make scenarios. So will they go down? We can create a scenario where they go down. But the situation now, is really, we cannot see anything. It's very muddy. So it's very hard to see and very hard to predict where we are going right now. We need more clarity when the panic clears.
Badr, go ahead.
Thank you, Suhaib. I have two questions for Dr. Anas. The first one, the growth of 10 million for the coming years. Is there any calculation shows how much renewable energy percentage? This is my first question. My second question regarding the currency of the oil prices. Naturally, the oil price is in dollar. Can we in the future ditch the dollar and it's going to be a different currency? Thank you.
Okay. Regarding the second one, please go back and replay the session because we spent time talking about this. Regarding the first question, I had a presentation at Abdurrahman Shderi Center, Dar al-Ulum in Arabic just a couple of days ago, where we discussed this point in Arabic. I urge you to go and watch it. But I will answer this question quickly. First of all, when we look at Europe, United States, Canada, India, and China, the substitution between renewable energy and oil is extremely limited. And I emphasize the word extremely here. And the reason why, because renewable energy is used to generate electricity, and rarely oil is used in those countries to generate electricity. So there is no substitution in this case. And therefore, when we talk about the 10 million and the future of oil demand, it's not related to renewable energy. What that means is, even if Europe decides to double its renewable energy, the impact on oil is extremely small. If you look at it globally, based on OPEC forecast in the next 30 years, the substitution is only 1 million barrels. Based on my forecast to 2050, it's about 2 million barrels. That's it in the next 30 years. So there is no relation in a sense, or it's not important to discuss renewables versus oil in the future. What is important in this case is the role of electric vehicles. And we discussed this in the previous space in details, that the role of electric vehicles, assuming all stars line up for electric vehicles, the impact is lower growth in demand, but the demand itself is not going to decline, which means that we are at almost 100 million barrels a day today, and we are not going to go below it. Suhaib?
Shubham and Al-Hamidi. Go ahead, Shubham.
Yeah, you bet. I know we're short on time, so maybe we can leave this for another time. But Doctor, you mentioned there's 10 million barrels we need in the next 10 years. So I know Iraq has a Majnoon Field. UAE has some projects they're working on. But where do you see the rest of the 10 million coming from? I mean, is it Canada? Is it the U.S. offshore Gulf of Mexico? Where would you put your money if you were, and I know it's hypothetical, but where are these 10 million barrels going to come from, in your opinion? Thank you.
I will exchange a message with you and talk about this in details because I know you love details. But generally speaking, I'll put my money in shale and Canadian oil, of course.
Yeah, you bet. Thank you.
Thank you for that. And with that, we've touched, 2:45 here Mountain Time. So I'd like to defer it back to you, Dr. Anas, to see what you'd like to do.
Let's take one more question.
Okay. Al-Hamid, go ahead, and then we're going to wrap this up.
Thank you, Suhaib, for giving me this time. Dr. Anas, hope you are fine. I have compressed question. The first one is with the announcement of Boris Johnson, the Prime Minister of British, visit Saudi Arabia. What is your forecast? Do you think that Johnson will be, succeeded in handling the oil price with Saudi Arabia? Number two, what do you forecast with the price of oil inside the United States? Do you think that it will exceed $5? And what will be the impact of this on the midterm election? Last question is, for how long do you think that the high oil price it will be benefiting Saudi Arabia? Thank you.
Okay. First of all, any world leader visiting Saudi Arabia proves one point. Proves that the policy that Saudi Arabia followed and the circumstances it provided an invaluable opportunity for the Saudi leadership. So why give it away? Just logic that if they are after my spare capacity, why I have to give up my spare capacity so they won't talk to me anymore? So I don't see any major change in the Saudi oil policy in this case at all. Gasoline prices are already very high in the United States and above the threshold. And all we have right now is to get rid of COVID to see the impact. I think people will change their behavior immediately. When I go to pick up my kids from school, the line of cars is about 1 mile. Historically, it was only about probably 20 cars. That 1 mile simply because of COVID. That will disappear if COVID disappears with it. And people will not pay for this. A few days ago, I mentioned on a podcast or on a space that my son had a soccer game in a place that's 45 minutes away. And parents complained because that was a long drive and they don't want to drive all the way when gasoline prices are.
Dr. Anas, okay, yeah, you're back. Go ahead.
So people are already feeling the pain without even having the national average reaching $5. I'm sorry, I cannot answer the rest of the questions simply because we ran out of time. And I would like to thank you all for attending today. We will have another session probably in about 3 weeks. And I urge you all to follow At-Taqa, our sponsor, ATTAQA2. Again, if you are a non-Arabic speaker, just press the translate button to see the news or the reports or whatever reports they are publishing. And Suhaib, I don't know how to thank you. I think you have proven that you are one of the best moderators I've seen in those spaces.
Thank you so much, Dr. Anas. We're going to bring this room to a close, but before I do, I wanted to get #oil. If you can share some, kind words of appreciation on behalf of COM for Dr. Anas's contributions into the space, I'll pass it off to you. And then right after you're done, I'm going to wrap it up. Maybe we could even also include a nice little ode there.
Sure.
And bring it all to a close.
All the lovely people
go ahead,
here.
#oil.
Absolutely. So, hey, thank you. And Dr. Anas, you nailed it.
Sohaib is one of the best, if not the best, in the Twitter spaces, and we're very blessed to have him as a part of the Canadian Oil Mafia, and you, of course, being a friend of the Canadian Oil Mafia. You know, we came into today with lots of questions. The world is full of fear, and as you said, this is unique times. And if you're looking, you know, over these unique times, we can see a trend. It's going to happen regardless. What can happen in the meantime is obviously going to be based on lots of circumstance, but where, you know, the proverbial puck is going, it sounds as is almost inevitable. And we could not thank you enough. Your expertise, your professionalism, and obviously you do help to educate us in sort of how to approach the topic as well. And that's very important because we're very passionate here in the Canadian Oil Mafia. As Sohaib said, we have our own ode, but really, if you follow us on any of these spaces, we're almost defensive of the oil industry. And it's funny because we want everybody to think just the way we do, but your approach of education, knowledge, wisdom, and professionalism is something we all aspire to. And I know Sohaib very much appreciates you taking the time. We've been talking about you for a week just in anticipation of this, and I expect that to happen in 2 weeks as well. So with that, Sohaib, would you like me to, I will close with the ode to the Canadian Oil Mafia. Yes. Thank you to Sohaib and the rest of you. And Anas, this is for you. All hail. All hail the Canadian Oil Mafia. Invest.
Thank you.
Land of the free. From sea to sky, we know the commodity you rely on to get from A to B. Block our pipelines, increase your fiscal debt. It will be you that soon will see. Canadian Oil Mafia, Canadian Oil Mafia. Free cash flow is the way to save thee. And with that, I'd like to wish everybody and Sohaib and Dr. Anas, our moderate speaker today, a fantastic rest of your day. Sohaib, thank you on behalf of all of us for all you do.
All right. Take care, fellas. All the best. Till next time.